Okay, everybody, welcome to Module 4. In this module, we're going to go over the 4 core VWAP wave setups. So this is why you need a playbook. Consistent traders don't trade random candlestick patterns. They follow repeatable setups. Each setup in the VWAP wave system is tied directly to market context. We don't need to guess where price is going. We read structure and then we execute when it confirms. Okay. So when I post my recaps on where all the setups were for the day, yes, in hindsight, it looks beautiful and there are tons of setups. But the real crux of this is not going to be in learning the setups and where they are. It's going to be how you execute and manage your trades. All right. That's going to determine the difference between your success or inconsistency. All right. But the first step is understanding these concepts and being able to recognize in real time when a trade is setting up. Okay. Now there's more to it. We'll get into that in the next few modules. But if you can't recognize the actual setups, you can name them, then you're not going to get that far. So this is where it all starts. These 4 setups are going to cover 95% of what we trade daily. And if you've been trading a system that doesn't have names or actual finite setups, you're kind of just doing randomness, right? I had an amazing mentor, an incredible trader, right? He always told me if I can't name the setup, it wasn't a trade. You're not a trader unless you can name the setup that you just took. All right. And I live by that and I coach it with my students in the community. So let's get started. Setup 1, the price discovery continuation setup. What is it? This is a breakout continuation setup that follows price discovery away from a balance zone. It's our trend following type play, but we don't chase unless you're aggressively scalping. If you have that skill, not everybody does or prefers that. So normally, most of my students are waiting for pullbacks. When to use it? This is when the market breaks and holds, shows acceptance outside of the VWAP value area or the initial balance or a distribution on the volume profile. This is great when VWAP is sloped and price is holding above a value area high or below a value area low. All right, no quick rejection. All right, we want price to be accepted in this new territory. All right, so we add our deviation bands to the VWAP, our 1 standard deviation bands, and this helps create a visual map of the day's value area. All right, VWAP is our point of control. This is fair value. And the 1 standard deviation band is our value area high and our value area low. And these are going to act like dynamic support resistance zones and form the core of our entry locations. All right, here's our entry criteria. We're going to enter on pullback to the 1st standard deviation band. And if the VWAP is in a strong trend, we'll use the VWAP bounce setup, which is in number 4, setup number 4. We look for a prior breakout level, such as the initial balance or a value area high, value area low flip on the volume profile where we actually escape a value area. Now we look for that to become a new value area low, right? Support changes into resistance. And we look for order flow confirmation, all right? So the cumulative delta or volume or tape buying, selling pressure, and we'll cover this in later lessons. But we are looking for confirmation. All right, that helps us manage the trade. And if you're not trading the first touch of the band, this gives you a high probability setup. This is what a price continuation long looks like. All right, so price breaks out of the value area, back test, pullback, and we go long. Our stop would go right underneath this swing low. All right, ride this up. We get another setup. All right, we get a small bounce. All right, we try to return to value. It quickly rejects, and we get another price continuation long. All right, you may or may not have gotten stopped out from this one, but you could take it again, put your stop under this swing low. Great setup as well. Big move. These are 5-minute candles. Eventually, we slowly returned to VWAP, to value area, and we broke out again. And we got 2 more price discovery longs. All right. That's what it looks like. Our stops and targets. All right. So usually our stop is just going to go beyond the band. All right. Or the swing low of the pullback. Our target is going to be the next VWAP band if you use multiple bands. I generally do not. I'll be scalping and trying to get a good move off of this. But you can use the next VWAP band. Or you can use a multiple of the IB range. So a 50% extension or the next double extension of the IB range. Those will all make great targets, or a previous value area on the composite, multiple days. You can trail partials using structure. So as you create lower highs and higher lows, or you can use band-to-band logic with multiple VWAP bands. All right, there's a couple of different ways to do this. My way is scalping the reaction on the touch. There are some nuances to this. We don't want to chase the highs. We'll let the market come to us in a pullback. All right, then we wait for strength. So the cleanest continuations happen early in the session after an IB break. All right, so not all setups are equal. I'm going to talk about this in my core setups guide. All right, not every setup is equal. The best setups happen with fresh contextual shifts. So the first time we break out and pull back is going to be the best setup. All subsequent setups are lower probability. All right, and then context first. It's not an A+ setup if price is still inside value on a giant volume profile or in the initial balance. All right, it's better if everything lines up. All right, confluence. Let's talk about setup number 2. All right, this is our fade value area extremes setup. What is it? This is a mean reversion setup where price tests the other edge of VWAP's value area, or the edge of high volume node on the volume profile, or the IB high or low. All right, all the same valid setup. This works the best when the market is in balance and not trending. All right, so choppy sideways conditions. When to use it? Price trades inside the VWAP value area for most of the day or for quite some time. We're spending a lot of area in there. No strong breakouts. The VWAP is flat or sideways. And price is obviously rotating between the 1 standard deviation bands. And as it tries to leave, it's obviously being rejected at these extremes. What's our entry criteria? All right. We're going to enter on the first sign of rejection at the band. All right, or the edge of a high volume node on the volume profile or the initial balance. All right, so if we get a wick, for example, above the 1 standard deviation band or below, and then it quickly accepts back inside, that's a great entry signal. Or if we hit a low volume node and it clearly absorbs for a while and then it bounces and buyers or sellers step back in, we get some strength, that's another great signal. Or if we fail to follow through after stretching outside of the band. So we trade outside of the band for a short period of time, maybe 5-10 minutes, and we don't really go anywhere. We kind of hover just outside of it and we snap back in. Another great signal, right? So they're not all the same. Sometimes we'll touch it to the tick. Sometimes we'll make a wick. Sometimes we'll break outside but stay close and trade very closely to it for a little bit and then break back in. All right, these are all valid entries. All right, it doesn't all look exactly the same. That would be too easy. I wish it was that easy, but it's not. So we enter on confirmation of order flow, reading the tape, or scale in across the band area to get the best price. Okay, so there are multiple execution methods, and we'll go over execution methods in a later module. This is what it looks like on the chart. This is a 5-minute chart on the S&P 500. All right, quickly, easy seeing. We've been spending time and value, all right, and price rejecting at the value area extremes or upper band. This one didn't quite get to the band, found support at VWAP. This one made a wick across the band and traded back inside, back to VWAP, broke through VWAP, other side of value, didn't quite get to value. I can tell you what, though, if we put the other indicators on the chart, I bet you there's something right here and up here. This could be our edges of the high volume node on the volume profile or initial balance level. There is something there. of why we didn't quite get to that outer band. We broke through point of control again and revisited the other side of value, of which we tried to break out, got rejected, and traded back to VWAP or point of control. All right, so this is typical balance trading in the VWAP bands, fading the extremes. Where do we put our stops and targets? Generally, we'll put a stop just outside the testing candle or outside the one standard deviation band by a couple points. Our target will be the VWAP or point of control for our first scale out. And if you're looking to get a bigger move, we'll try and get to the opposite value band, all right? The other side of value for a runner if the day stays in balance. All right, so if we fade this value extreme and go short, first stop is the VWAP. If we can get past VWAP, we can expect to go to the other side of value. However, on this trade, we could not get past VWAP and we returned. All right, so we want to scale out. We don't always get past VWAP, guys. Sometimes we do. Now, when we combine VWAP, profile, and IB, all right, this is where we're going to get all this information and get the best setups. All right. What are the nuances of this trade? All right. Don't fade on strong trend days. All right. You'll get run over. All right. We're not trying to fade value or extremes where we're clearly in price discovery on our other higher time frames or even on with our other indicators. All right. We're outside of initial balance or the volume profile is very thin and we're in price discovery. Watch for clues. All right. Tight ranges, flat VWAP, overlapping IB, initial balance with the bands all lined up. Those are the excellent conditions. We got to let the rejection prove itself. All right. No confirmation. That's a lower probability setup. Okay. If you just trade as soon as it touches the band, right, there's really no confirmation there. You could get a good trade. Right. It's definitely a good price entry. You know when you're wrong if it keeps going outside the band, you're still holding it. So, and that's all about trade management and execution. Setup 3. All right. I should say, based on this, it's important to realize that, while a setup is setting up, it doesn't always happen. We're playing probabilities here. When a trade sets up, the probabilities that it will happen are significantly more than it not happening. All right. Maybe we have a 70 or 80% chance of this trade happening. All right. That doesn't mean it happens every time. Okay. There's no perfect system where you just win every single trade. All right. So we got to move past that and we have to trade these to the best of our ability, have full confidence and faith in the trades, how they set up, and that they will work out more than not. And that's what creates a profitable trading system. We're playing with probabilities, not perfection. Let's talk about setup number 3. This is the return to value setup. All right, what is it? This is a failed price discovery continuation setup. Okay, so this is when we've been out in price discovery for some time or distance, and then eventually we're going to return back into the VWAP value area. All right, this is how it's distinctly different than a fade value area extreme. All right, we actually left value. We spent some time in price discovery. Now we're returning to value. So that's on the VWAP bands. And when that's happening, we're often forming a new distribution or changing the distribution on the volume profile. We'll enter in the direction of the entrance. So if we enter through the lower band, we're going long. If we enter through the upper band, we're going short. And we generally ride this back towards the VWAP or point of control. When to use it? We use it when price breaks above or below, back into the value area or IB zone, or back into a previous distribution, but eventually returns after spending some time outside. We clearly reclaim a value area high or value area low, or the IB. And it's usually accompanied by a strong break back inside value with a possible backtest confirmation. What's the entry criteria? We enter on re-entry into the VWAP value area. After showing acceptance back into the value area as defined by distance back in or spending some time back in, we can enter on a back test of the band. All right, we don't always get the back test, but that's the highest probability setup and the easiest to manage risk. We can enter on order flow strength after the back test, so waiting for buyers or sellers to step in the direction of our trade. Now you can also trade the break, all right back into value area if you have strong scalping execution skills and the ability to get out of a trade fast that rejects. You have to be prepared for the possible rejection, all right? So this is harder to manage your risk with, so you have to be much faster with your execution skills. All right, that's a skill that needs to be developed through practice, but for those of you who work on that skill, you get more setups and you can actually trade the break, not just the back test, because it is a lower probability setup. Now, a bonus signal is if you get failure happens near a well-known resistance or low volume area, right? So we're outside in price discovery. We hit a low volume node, and that's where we start to enter back into value. All right, this first one in the guide is the return to value. So we've spent time out here in price discovery, most of about an hour or more. All right, eventually we return, we break into value. Now you can trade the break, be prepared for a rejection. However, the better setup is the break, spending time in value, and then the back test, which we got right here. We buy that back to Vwap. If we get past Vwap, we can go close to the other side of value. This is a fade value extreme, not a return to value trade, but just want to show you how it often retests that area. So we got two setups. We got the return to value, and then we got the fade value area extreme. What are the stops and targets? All right, the stop is just outside of the first standard deviation band or above or below the backtest confirmation candle. All right, if you're scalping, you just got to get out if it rejects on you. What's the target? First target is going to be the VWAP or point of control, and your second target, if looking for a runner, is going to be the opposite end of the value area. The nuances. Now, these tend to be fast-moving trades. It's also one of my favorite. Failed auctions tend to snap hard, so you're going to watch for the exhaustion candles, long wicks, volume signals, all right? Buyers, sellers getting exhausted, the opposite stepping in, and if price re-breaks outside of value with velocity, that's your signal to get out, all right? We don't want to be trading a return to value trade and be outside of value, okay? It was probably a trap. Last but certainly not least, we have setup number 4. This is the VWAP bounce setup. What is it? The VWAP bounce is a continuation setup where price pulls all the way back to VWAP mid-trend and then resumes in the original trending direction. This is great for entering ongoing trends without trying to chase price. When to use it? We use it on strong trend days that are in progress. We have significant price discovery underway in the higher time frames or on our other indicators like the profile or the initial balance. And price pulls all the way back from highs and lows and retests the VWAP. Okay, usually a significant move and pullback. It's great when VWAP is clean and sloped. We don't want a flat VWAP. So what's our entry criteria? We're going to enter on the price test and bounce from VWAP. But you have to be careful, guys. You got to watch. Sometimes it will play out to the tick on some markets. Some markets you're going to get trap candles, engulfing, delta surge. You'll get a break and reclaim. All right, these are all kind of choppy conditions you can get at VWAP before you get the move you're anticipating. So we'll try to enter once price confirms and holds above or below the VWAP in the direction where we're going. Okay, these are our VWAP bounces. All right, some time out in price discovery, big pullback. All right, we got our first one. This one all the way back to value area low. This one broke and reclaimed. All right, so that was a trap for anybody looking to go long above VWAP. Sucked in the longs, rejected, back to value area low. We got another last one with a slight break, broke out of price discovery. And then we got our last great VWAP bounce that moved out and spent the rest of the day in price discovery. And here we got a nice price discovery short right there. So this was a trend day. So we'll tend to put the stop just beyond the VWAP or a recent minor swing. We'll target the 1 standard deviation band. And then the next target would be the prior trend high or low. And then even the next deviation band if the trend resumes. That would be a huge move, but that could be a decent target when on a big, strong trending day that you would use this trade. What are the nuances? All right. The first VWAP test of the day is the strongest and the best. All right. Like our principle from the VWAP guide. Not all setups are equal, and the best setups come with fresh contextual shifts. So the first time it sets up is the best. A+. Try to avoid chop. If price is tested VWAP multiple times already, try not to force it. Easily get chopped up at VWAP. Remember, this is a very popular price. We got institutions and hedge funds getting in and out here. Those big orders being transacted could cause a lot of chop around the VWAP. So a VWAP break and quick reclaim can also be a nice entry signal. That's a classic trap. Sub VWAP trap, they call it. So in summary, guys, there are 4 core setups in one unified framework. These setups aren't random. They're designed for specific market conditions. All right, our price discovery continuation, we have an active trend forming. Fade value area extremes, the market is in balance. We have our return to value. We're developing a new value area, returning to a previous value area after some price discovery. And then lastly, our VWAP bounce, the clean pullback to VWAP mid-trend. If you match the right setup to the right context, your edge becomes mechanical. If you follow me on my live stream, I'm calling out these mechanical setups one after the other. They're just watching price, waiting for them to set up on multiple markets. Up next, Module 5. We're going to talk about some advanced tactics in special situations. All right, now you've got the 4 core plays, but the markets aren't always that clean. In Module 5, we're going to dive into my advanced playbook extensions. All right, so we have the VWAP and point of control scalps and balance that I take. We have late day entries on a strong trend day. We have inside higher time frame balance area extreme fades and price discovery on the higher time frames. And then we have the initial balance extension fades. All right, these are my extensions of my core plays. And these are the nuanced trades that take you from a solid core setup trader to somebody with a robust playbook, making you very sharp and adaptable to whatever market condition we're currently in. Even more setups. All right, guys, see you in Module 5.